Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We had some FDA approvals. They're pushing gains in some pharmaceutical companies, specifically Novo Nordisk. So here to break that down and a whole lot more news that's coming out about Novo is Madison Muller. She's Bloomberg Health Reporter. But the big news, so the weight loss drug Wegovy got this U.S. approval to treat a form of liver disease. So what does this mean for the company?
Yeah, so on Friday afternoon, late on Friday, Novo Nordisk got approval for Wegovy, which is its weight loss drug to treat a liver disease called MASH. And this sort of is we've seen over the last couple of years, so many studies come out to show the potential health benefits of these weight loss drugs beyond just, the reducing the number on the scale. And we knew from studies that there was some benefit to the liver from taking these drugs. And so Novo was able to notch an approval for that, which helps one with insurance coverage. Wegovy and then Eli Lilly's drug Zepbound are still not it's super widely covered by insurance companies for weight loss, but having some of these other health benefits shown and proven in studies helps them convince insurers that they are worth covering. And so this gives them an edge against Lilly. Lilly's drug Zepbound is not approved yet for this indication. And so it gives them sort of a leg up there. And then it also gets, it sort of is another benefit for Novo because they've been struggling over the last year, just with Zepbound sort of making waves in the market and taking market share from Wegovy. This gives them a leg up there as well. And just with the tumultuousness of the last few weeks, they had a CEO ouster and a few other moving pieces. So this is good news for them, and we'll see. But it will maybe help them gain back some market share.
Again, one of the issues for these weight loss drugs is the cost. And if you're not covered by insurance, they really are expensive. So by slashing the cost of Ozempic in half, does the company believe that's going to open up a big new vein of new customers maybe?
So it's interesting because if patients are on Ozempic, they are usually on it. It's a type 2 diabetes treatment. And usually that's covered by insurance.
Diabetes, but does it have a side benefit, I guess, of weight loss?
Yes. So, there are two different drugs, right? There's Ozempic, which is the diabetes drug, Wegovy. They both use the exact same active ingredient, which is semaglutide. Okay. Wegovy is a higher dose version. If you're on Ozempic, it's lower doses. Okay. So it's not quite as strong. But there is that weight loss side effect on both drugs. Previously, Novo actually did cut the cost of Wegovy down to about the same price, $500 a month, back in March. And now they are doing the same for Ozempic. But it's interesting because the question of whether or not this is going to expand access for more patients sort of remains to be seen because, again, if you have Ozempic, you usually are covered by insurance for it.
Now, something I also said, they're partnering in this article. It said with GoodRx to offer Ozempic Wegovy for the same price as pharmacies. But didn't Novo try the partnership thing with Hims and Hers, and that didn't work out so well?
Yeah. So Hims was one of several partners that Novo has sort of worked with over the last couple of months, again, to really make waves and get into this market or gain back market share because it's really lost ground to Eli Lilly. Hims was one of the companies that they partnered with. They've partnered with a couple of other telehealth companies, as well as CVS, to make this cash pay price more widely available. But this is the first time that they're dropping the price of Ozempic as well. So this partnership with GoodRx, any patient is essentially a coupon. Like any patient who goes to a pharmacy uses GoodRx is going to be able to get this cash pay price for Ozempic and Wegovy.
Mention the Hims and Hers, those compound drugs. Mm-hmm. How effective are they vis-a-vis the GLP-1s themselves? Because that would be if I were like Novo Nordisk, I spent all this money to develop it, that would be a bummer to see these guys come out.
And that's a really good question, actually, that question of how effective are these drugs, because that's the problem, is we don't know. There are studies that drug makers are required to do. They have to go through a lengthy FDA approval process to prove that their medications are safe and effective. Compounded drugs don't go through that same approval process. So there's no actual studies showing how effective those medications are. And it's a little bit of a gamble. I mean, we've seen patients losing weight on these compounded medications, and we haven't seen a tremendous amount of side effects that are really different from the branded medications. So the problem is just more that we don't actually have a lot of visibility into that compounded market and don't know how those drugs stack up to the branded medications.
In the last 30 seconds or so we have, where does this all put Eli Lilly then? I mean, they already had the setback with the weight loss pill. So now we're hearing all this about Novo. Where does this put them? Yeah.
I mean, it's interesting. Like the two companies, I think last year, it was just, they were so red hot and there was like nothing, the expectations were sky high. There was really nothing that seemingly could bring them down. But now we're seeing a couple of stumbles. And I think that, shows, again, how high the expectations are for this market. There's just no room for failure. But we'll see what happens next with Lilly.
When is the pill going to be available? 6 months, 12 months? A year,
sometime 2026. So they said that they're planning to file for FDA approval by the end of the year and then hopefully launch next year.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We do have some possible deal-making news. So sources saying Thoma Bravo in talks to buy human resources management software provider Dayforce and take the company private. So what does this all mean? Well, we have the right person to break it all down for us. It's Niraj Patel. He's Bloomberg Intelligence Senior Software Analyst. Niraj, you're joining us from Princeton. Thanks for joining. I want you to see if you can talk to us about Dayforce, because I'm reading through the article. It says shares are falling about 60% from their 2021 peak through Friday. Can you talk about some of the things that this company has been struggling with?
Yeah, hi, Lisa. This has been even beyond a Dayforce struggling point. The HCM industry, which they play in, the HR and payroll software, that has been under pressure along with application software. And just for a little bit of valuation perspective, application software companies, they're in the 17th percentile of their historical range, and Dayforce is at an all-time low. And this is telling because they are facing a lot of deceleration on the top line. They, in 2021, 2022, they were at 22% sales growth. Now we're looking at 11% for this year and next year. And there's a lot of factors coming into play here. They have a lot of competition. The customers are slowing in terms of new ads, as well as the upsell and cross-sell to existing customers.
So is this just the spending and human resources part of the pie? Is that slowing, or is it competition here? What's the problem for some of these companies?
Yeah, their competition push is limited. They play in the larger enterprise segment, so they run into UKG or Workday. So it's not so much competition, but it's a little bit of a macro trend. You have the U.S. labor non-farm payroll additions, which decelerate significantly, and that's growing at about a 1% pace. It averages 2 to 3%. So we have a macro factor. Second, they have a portfolio which is common to a lot of peers. So there's a lot of portfolio convergence in HR software. It's covering like payroll scope, account administration, workforce management, talent management, learning management. So these players have all converged on the same portfolio. They're trying to push that sale, but there's only a limiting sale per customer that they're able to translate to. For example, they're selling about $13 of software per employee, and it's only growing at a 5% pace.
Now, Niraj, were you surprised by this report? Because it seems like from how you were talking, I mean, kind of this path was leading to the way it is that this report came out today.
Yeah, no, this didn't catch us by surprise in the sense that we're expecting more consolidation. Paycheck acquired Paycor in April, and that was a smaller player that targeted more small SMB segments. This player, Dayforce, they're targeting the large mid-market customers. So we're not surprised. The valuations are quite low. The one positive factor here is HCM ranking in terms of AI disruption across app software is on the lower side. Sales and marketing is on the higher end. IT service management is on the higher end. So that may be a little bit of the appeal coming from Thoma Bravo's lens, where the AI agents are not going to take over the app function in HR software so easily.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
So Air Canada, right? They pulled their financial guidance through year end. Thousands of Air Canada flight attendants, they walked out over the weekend. So what we're going to do is find out more behind the strikes, more behind of what's going on. Here with us to explain more is Francois Duflot. He is U.S. airline Aerospace Analyst here. Francois, thanks for joining us over from the Princeton office. First off, I mean, this is the peak travel summer season. How much of an impact is it going to have for the company?
Yes, good morning. Yes, exactly. That's the worst time that it could happen. August is one of the busiest month of the year. And when we look at the number of cancellation during this weekend, almost 80% of the flight and the seat were canceled during this weekend. So it's really significant. When we try to do the math, we get to something around 200 million impact revenue. So that would be about 3% of the 6.3 billion revenue expected for this quarter. So it could be big. And the question is, how long does it take for Air Canada to resume and get back to the full operation? Because it's not just the flights and the seats canceled during this 3 days, but it's also how long does it take to resume and return to normal operation, knowing that we are not even sure when flight attendants will go back to work. So that's a big question. And then obviously the lasting impact on bookings, fares, and the brand name that the strike could have through the rest of the year, because when this kind of event happens, you usually end up having to discount a little bit fares to lure customer back to your flight. So there is also those questions, but that's the kind of amount that we see for this quarter. And just to give a little bit also of context, this happens at a time where Canada is hit by the U.S. trade disputes that not only impacts the GDP, but also impact the travel patterns. And Air Canada was definitely facing big headwinds because of this and had to reallocate seats from the US to somewhere else, and that had an additional impact on yields during 2Q and likely 3Q.
Air Canada, what's the market? How's the market share shake out in Canada?
In Canada, they have almost 50% of the market in terms of capacity, between 45 and 50, depending on the market, depending on the quarter. But it's very significant. And then you have a second competitor, WestJet, which has about 30%. So you have a very two strong airlines in Canada that have a sizable share.
All right, Francois, Canadians this winter, when it gets cold, you telling me they're not going to fly down to Arizona and Florida?
Probably less. At least Air Canada cut travel to the US. Right. They cut 8% in 2Q. They were likely to do the same through the end of the year. That's the only way in order to make sure that yield remain kind of stable. They managed this in 2Q. The hope was to do it again in 3Q and 4Q. We'll see if that can happen, and we'll see what kind of deal flight attendants can get during the negotiation, because that's also some things that the market will be looking at.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's switch to tech. Like, When I go to vacation, I go to like the Jersey Shore. Mandeep Singh, no. The dude picks Calgary, like in Canada. Who does that? I mean, I love skiing out there. So I don't know, maybe he knows something we don't. It's beautiful out there. I get it. Mandeep Singh, Bloomberg Intelligence Senior Tech Analyst. Mandeep, here's the story I want to get to. Back in my day, if you were in a public startup company and your stock was all tied up in a private company, you had to wait for an IPO. Then you had to wait for the 6-month lockup, and then you could begin starting selling. That's not the case today. The people in OpenAI, they're selling about $6 billion in stock here. This is becoming more and more common, isn't it, for your tech companies?
It is, and I think Meta exacerbated that trend by, the acqui-hires they've made in the last 2-3 months. I mean, there are startups that have just disappeared without an outright acquisition because Meta acquired their top 5 people or top 10 people. And look, when you have that sort of risk of losing talent, you got to find ways to liquidate your stuff, the stock that you have in your company. And for OpenAI, I mean, talent is paramount. This is a company that may end up doing, almost a $20 billion revenue run rate by the end of this year. And the same thing for Anthropic. Anthropic started off the year at $1 billion run rate. Now they are at a $5 billion run rate. When you 5x your revenue like that, you have to find ways to, keep your employees happy and retain them. And I think this is their way of making sure the employees can liquidate some of their stock.
So is this a perk for all OpenAI employees? I mean, do you have to be there a certain amount of time, or can anyone take part in this?
I mean, we don't know that level of detail, but suffice to say, I think they've allocated a certain amount, and the private valuation of this company has gone from almost $250 to $300 billion to $500 billion now. And so clearly there is a lot of appetite for a company like OpenAI, which is at the frontier of everything that's going on in generative AI. And, there are buyers of that kind of stuff.
All right, I got to satisfy the banker gene in me. Is there an OpenAI IPO at some point?
Probably they will. And my hunch is, when you are a category leader, in any sort of technology trend, you want to be a public company because, one, it clearly helps you get more long-term investors for your stock, and also it's great PR. So I can't imagine an OpenAI staying private for very long. With that being said, their financials don't look great. I mean, from what we know, they're burning a lot of cash right now. So it's not a very profitable business model, but the top line growth is really what is getting them all the attention right now. So they will have to clean up that OPEX side if they plan to go public. So I don't think it's imminent in the near term, but I wouldn't be surprised if it happens in the next 2 years.
Hey, Mandeep, in the last minute we have here left, does this put, OpenAI as the world's most valuable startup? I mean, does it push it past SpaceX? Is it sustainable?
By far. And look, the top line growth, as I said, both for OpenAI and Anthropic, this is not something we see very often. So at their revenue base, I mean, they are clearly the most coveted and the most talked about name. And that's going to be the case for a while.
Mandeep, what skill is the AI skill? Like, what are these people acquiring in these acqui-hires when they're paying out these big packages? Is it coding? Is it just engineering 505? What is it?
So right now, when you think about how GPT-4 and 5 became smarter and smarter, it's about, engineers who can help these models become smarter and smarter in terms of answering more questions, doing more types of things. And that requires a certain knowledge of probability, statistics, tokenization, that, the way large language models are built, there is a neural aspect to it. And that refinement of LLM is what is making them more intelligent. So you need to have that basic level understanding of tokenization and what are the tokens that makes these LLMs smarter and smarter. And I think that's why they deserve to get all the attention.
Yeah.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.